Could it be that this ticker has partnered with the moon gods? Was today the end of a dark era and the commencement of brighter days ahead? Well, let's pop open the hood to observe the probabilities at hand, but remember one thing. The targets we saw today were displayed in the analysis just yesterday. Welcome back to the channel on this Hump Day Wednesday. This is ARCa. Let's dive into GTII. What is up? What is up, you guys? Thank you so much for coming back to the channel. Please make sure to do me a favor and hit that like button, subscribe to the channel, do that whole thing that is necessary to make the channel thrive and thrive on forward. Let's go ahead and dive into this side of the analysis first. Okay, so what you're observing here is actually none other than yesterday's video on YouTube, right? I just have it zoomed in like freaking crazy, but this is the link right over here, right? So I zoomed in like crazy because I have this is a large screen, right? So it consists of two sides. It's a 49-inch wide curve display. So this is the right side of the curve, so I can't actually full screen it, right? But nonetheless, yeah, you know I'm here on the browser, right? So please take a look at the analysis here, right? This is my algorithm giving us a target of 25 cents for today based on its expansion that we spoke of when we reached that 18-cent target yesterday, right? So we explained how this thing could expand by maybe 1 or 2 cents. So it did expand by about 2 cents, and that also the expansion also expands towards the upside too. So then the probabilities start expanding a little bit, right? So your average true range, changed itself from 3 cents, which we were observing right up here, right? We explained this. And the daily true range, right? Your ATR is your average true range. The distance an asset can move on average throughout the day's trade. So it expanded from the 3 cents into maybe 5 or 6 cents. And this is the reason why we went to 25 cents. There was no real reason to backtest this. I did explain that I actually expressed my personal opinion on this potentially not happening today, the 25 cent, right? In fact, the analysis was reading more like, you know what, we closed at 19.30. Let's go ahead and backtest ourselves to the 18 cents, come back up to the 19.30, validate resistance because that SMA 50 was super strong, and then we could see about potentially breaking down the 18 cents. But if we are not breaking below that 18 cents, then we're not seeing the target of 15.96. Right? That's the condition. In order for us to see 15.96, we need to break the 18-cent zone. All right. So it just so happened that today we moved up to the upper bound of the ATR. So it's still within the bounds of a normal trade. Okay. So let's and this, yeah, right. This was also paired with a 30-minute time frame. We noticed here that there was an SMA 14 below us. We said there's likely a bounce to happen at 18 cents for us to back test on 19.30, except we went to 25 and tested that top. All right, so let's go ahead and shift over to the other side of the analysis here. This is the other chart, and I'm going to take you guys back. I'm going to take you guys back to that very chart, the one that gave us that huge freaking target that everyone still hounds me about, right? About the $18 top, right? So, yeah, this is the 3-day historical volatility versus backtest. I'm not bringing you back here because we're at a point to where we can use this volatility test. In fact, we can't, right? Because the volatility test was taken from any time we enter the critical expansion zone. As you can see here, we're nowhere near entering expansion, right? So we can't use this back test for that upside. All right, but just to remind some of those, right, that are not aware over what happened, well, look at all this. Just to remind people, right? Just to remind people how that target was invalidated. All that you're seeing right here without any price action, right? All of that was filled with price. But initially it wasn't here. It was always just this backtest here where the little dinosaur is, where it says, if you click on it, it says this is the very beginning. In fact, it's not. We don't have that data anymore. But we did have it at one point. Initially, we made a backtest here. And this is the original backtest right over here. 11 total iterations. And these are the 11 right here. right? Now, when I came up to the new adjusted data, there were 31 new iterations that dated all the way back. So I can't even, I think it was 2008 or no, 2001 or 1999, I think it was, right? Huge amount of data all the way back there. And that data is no longer accessible again, but my drawings are still here. And I took advantage of it and I kept it, right? So just so you remember how that target of $18 to $21 were invalidated. That's how, because of the missing data. Right, so the charts were not giving us the exact information here. Now, I'm going to bring you back here because there are a couple really curious things. First of all, I need you to remember the side of the Gaussian channel that we spoke of yesterday. I think it was the 3-day Gaussian band where we bounced off of the, or was it the biweekly? I think, yeah, the biweekly. There we go. So check it out. This is the biweekly time frame, where we noticed that we made a complete wall-to-wall move, perfectly executed, right? And we bounced right off of that bottom side. So we're at a support. Of course, we're going to bounce there, right? But I still have to warn you that it's still a dead cat bounce. We still have a day and 20 hours to close this bi-weekly candle, right? So, and the bounce today, it was still part of the statistics, right? It was still part of the range that we can trade, 1878 to 25, what was it, 2515. So yeah. Anyway, this Gaussian band is very curious. What I'm seeing here is very curious because of the following. I'm not saying that we're gonna go up and we're gonna fail. I'm telling you that I have something to show you. Okay, and that's within this chart, within the chart that we back tested, right? So as you can see here, we have been writing. I've talked about this several times. We've been writing the ebb and flow here, right? And I remember, I even recall talking about these upside targets at around the $9 target, that if we did ever reach that, then what I was afraid of is that we could do one of these numbers, right? So that the literal wall-to-wall move. And if we follow the guide within these little arrows here and we push up on this channel, let's make sure that we can stay within the bounds of those arrows. Well, take a look at where price action bounced from. Look at that, right? It bounced from the channel at the bottom before it made that huge upside. I'm not saying we're going to make this huge upside. I'm not saying that at all. I'm just saying that we're at the bottom side of a trend, okay? And there is still another trend to keep in mind. That's this the descending broadening wedge, right? So that's and the wedge already took its profit. In fact, we were able to determine that profit was $2.99 from the run that I called from 40. I said 47, but we went to 45, right? So from the run from 45 cents all the way to $3, that is the genesis of the formation, and that's where we took profit, and that's where I said, congratulations, team, good job, we made the top, right? From there, we just we had to hover around and see what the hell was going to happen. So data changed, the partnership between CERTD created and GTII crumbled. A whole bunch of forward guidance just went crappy from there, right? So now I have one more thing to show you here, okay? So there is one iteration here, as you can see historically. I can't hide only the drawings. Okay, yeah, but there's only one iteration to where price action bled below this regression, right? And it bled down about 27.68%. There's a curious number there, because if I take this metric and I apply it to the current candle here, right about there, well, look at where it lands. It lands right about here, right there you go, at the bottom side of the candle. Look where it lands. It lands right on the regression, right? And it's just below the 1596 target that we're looking at. It's between the 10-cent target that we're looking at. Who knows, right? But of course, we could still fail that regression and whatever else. Guys, I am not telling you, I am not telling you that this is the bottom. I am not saying that this is the floor and this thing's just going to rip to the upside here. I'm not saying that at all. All I'm doing here is just following the charts. That's all I'm doing, okay? So I want you to know that is something that I'm observing, okay? Now, back to traditional trading. right? Back to aside from these silly little signals, which are just, we're talking about diagonal lines here, team. That first of all, in the trading world, diagonal lines are kind of, they're yeah, they're not looked at, they're not looked up to. Okay, to just say the very least. Okay, it's a thing of the new world for trading to look at these diagonal lines. It's data that speaks the most, right? So, and even this, right? Volatility bands, regression bands, Gaussian bands, all these types of bands present potentials of lower targets and top targets, right? Because this target here was never 1836. And in fact, over the last since, let's see, October 2023. The band went from 16 cents all the way up to 1849, where we hit today, 18 cents. So you can see how it fluctuates, right? It fluctuates. It's not at a fixed target. So when you were here in March of 2023, there's no way that you could have told that this was going to be at 18, because you can see how it fluctuates, right? So it has to do a lot with price action. Right, so from here, let's just go ahead and get rid of the Gaussian bands and take a look at the signals for tomorrow. Guys, one more thing I have to remind you, right? I always do this so late in the freaking video. Remember, get in touch with me at ArcMastersCourse at gmail.com. I am setting up a strategies mentorship program for 8 to 12 weeks. Get in touch with me, and I'll make sure to get you get you the syllabus, the disclaimer, and all of that good stuff. Take advantage of this, team, because I'm not gonna do this forever, right? In fact, I just discontinued my master's course, and I'm now continuing it into the mentorship for strategies. So I'm not always gonna do this, okay, team? So let's go ahead and move on and see what the probabilities are here. I'm observing volatility versus momentum, and if we take a look at the hourly time frame, it's your momentum oscillator here is already kind of pivoting towards a potential correction. But what while we have the immediate short-term time frame already corrected, and we could face a downside from here, there are still massive signals on the buy hourly. And notice this, right? You have a critical upside here entering the bullish control zone. Looks like you have volatility is not expanding anymore, but it is in critical. Okay, so that's pretty cool. The 3-hour time frame also has an upside pivot, and you're not expanding either, but you are in critical. 4-hour time frame upside pivot, and you're still expanding on this one. Right? So now the 6-hour time frame, same situation like the 4-hour. In fact, a little more graceful. This still has expansion, and you're still moving to the upside on that. 8-hour time frame, still expanding, an upside pivot, but not as strong anymore. You can see how the wave is starting to decline a little bit, right? We're expanding here, and you have an upside bias, but not as strong in the 12-hour. And now when you go to the daily time frame, you're flat, and you are expanding a bit, right? But not as aggressive as you are in the immediate short-term time frame, which brings me to this next potential. The daily time frame has a resistance coming up on the SMA 14 here of the RSI. Let me just, my goodness, man. Where is this thing? Let me just clear my throat here a little bit. There we go. Okay. So yeah, we have a resistance coming up right at about the SMA 14. It is slightly outside of the gravitational point. The gravitational point would be 48%, right up here. So if this RSI 14 moves into the gravitation of 48%, with the pressure of the RSI signal, this cyan line, then there could be a shot for the daily time frame to even see an upside, which could then, pose a potential temporary upside for GTII, and I don't know, that could be something that can lead up to maybe 35 cents, anywhere between 35 to maybe even 45 cents. But I can't say that. The problem is I can't officially say as that, I think that's going to happen here. The problem is that it has so many market participants holding at red, and a lot of the times when you have a lot of red in the markets like this, that, any upside that gets presented like this, like a 20% upside like today, or 25, 28, whatever it was, you're going to get people to exit the market immediately on any chance they get to recover whatever they have, right? Because there are people here with thousands of shares where a 5 cent move to the upside can make a huge difference in returns, right? And but yeah, I just want you to know that too. right? So, and I could also see a regression here. I could also see that, right? Something like this is not out of the question. It's in fact, it's feasible, and it's taking you up to about 30 cents. And we just kind of spoke about that, right? So I'm not going to say that that's going to happen. I'm just telling you that sure. What if that's the resistance here based on the daily time frame continuation to the upside? The only thing to prevent me from saying that it can continue like hard further to the upside is the 12-hour time frame. The 12-hour time frame is clearly resisting from that SMA 14, right? So we broke below. We broke below officially here. We tested the resistance, upside resistance, upside resistance. This is another one here. So, and notice how the SMA 14 is not in the gravitational zone up here, right? In fact, we're closer to this gravitational zone where we can be pulled down. So those are kind of the little signals that are preventing me from thinking that there could be a continuation. So the stats here are showing that let's see, the current time frame. Yeah, check it out. So 12-hour time frame is giving us a top side of around 27 cents, and 27 cents would be located right about here, right, which would be the top side of this range. I'm going to zoom in just a little more. Let me pull that back. Here we go. Yeah, right about here, right? That's 27.18 at the top side of the range here by daily high. So that yeah, I can see that as a potential resistance. That would be the top side of your 12-hour ATR. Now, because it's after hours, actually, you know what? We probably won't be able to see anything. Yeah, no, not at all. Yeah, it doesn't trade. It doesn't trade after hours like that. Another good signal here is that the 12-hour and the daily time frame both have a tweezer bottom with a bullish engulfing. That usually means a continuation to the upside, right? So yeah, I think that there's still a shot here. We could probably get a little bit further of an upside here. I'm not going to ignore the fact that you do have, remember here, I mentioned this target here of maybe around 30 cents. I even mentioned up here around 30, it looks, I'm sorry, I said 35, right? But it looks like it could be around a 34 or 35. Even if it got up there, it still creates it just creates a higher low. In the grand scheme of things, that is, right? If you just kind of pull out here and observe the markets, so that's, you're still doing this number here overall. Even if you reached that 45-cent zone, you're still within that regression. And it looks like the upper bound of the upper bound of the 1 standard deviation multiplier from the mean, which is 28 cents, that is a 34-cent zone. So it's very, very confluent to what we were looking at here. Right now, if we were, I don't know that it could launch all the way to 40 cents because my algorithm is saying that there is a shot that the upper bound of the 2nd standard deviation could be reached at 40 cents. It doesn't give me probabilities, but it's saying that it is at hand, right? So it's there, so we can't we can't disrespect that. I guess it's still within the bounds here. And just to observe here in a physical way, this is my other algorithm here, right? This is a reversion variant, and just so I can display it to you a little easier, right? I'll just make these a little brighter so you can see exactly where the outer bounds are, and this is already giving you the potentials of retracement, right? So first of all, here's the perfect regression top right into that 30-cent zone, 31 cents, and it looks like we have. It looks like we have a 28-cent mean right here, and there is your 34.18, right? There's your 34-cent zone based on the 2 standard deviation multiplier. This is physically observing it with volatility bands, right? So just another one of my algorithms here, team. Okay, so those are the potentials here, team. Just know that I still think that this is in a downward trend, right? You got to be careful. I guess the good news is that you did find a pretty interesting bounce from a zone that has been looked at here for actually years and has been trading in for years too. I guess if you want to take that as good news, then that's good news. Also, your Gaussian band, right? Your Gaussian band 3-day signal here bouncing, or the biweekly bands bouncing or having a price bounce from that bottom side. All that cool stuff. I get it, team. I get it, right? It's just I don't think we're in the markets right now I don't think the markets can support a complete recovery. I mean, anything can happen in the markets, of course. Don't take me as a Debbie Downer whatsoever. I'm just the paper boy, right? I'm just the one reading you the one reading you the hieroglyphs Right, so yeah, let's observe the markets. Let's see what it has to say, and we'll move forward from there. But please remember, if you want to take advantage of the ArcMasters course, right, the strategies mentorship for 8 to 12 week program, get in touch with me at this email here, and we'll go ahead and get that rolling. All right, team. So thank you so much for stopping by. Reach out to me with any questions or concerns. Have a good night. I love you all. Peace, 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 and peace. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever, never, never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night or day. And I promise, I will catch you at the Bell Mañana. Adios, team. Oh yeah.